Hey everybody, Jen Berbas with the Berbas Group in Austin, Texas on April 15th, tax day. Before we jump in and talk about the March real estate market, I want to discuss property taxes. You should already have your property tax bill in the mail. Travis counties came in this a couple days ago. Hayes County, Williamson County, all those should already have been sent out. Two things I want to talk about. The values appear to be going down. However, the rates are not out yet, and your final tax bill is based on your value times the rate. So it's really important that you go ahead and protest, even if your values have come down, because just because the values have come down doesn't mean the bill's going to come down later this year. Also, when you do protest and you lower your value, you get like this residual savings from that going forward, because don't forget there's a 10% cap on the increase for your homestead. So if you have any questions, let us know. Of course, we have a bunch of resources and emails we can send you with the links to go to the right place. If you are a new property owner, don't forget the bill may be going to the past owners, and it's important that you log on to the county tax website so you can get the bill, because you're going to need to do something with that, unless, of course, you escrow. All right, we're going to talk about the market, the real estate market in Austin, Texas in March. One of the things I want to point out here is the most interesting piece of data on this chart is the second line. It is that under contract and pending is down only 2.5%. Versus last month, it was down closer to 10%. And what you'll see is the total sales is closed is actually down 10%. That's because last month, the pending units were lower than they were the previous year. I think this next chart explains it a little bit better. You can see that pending contracts in March is starting to go up quite a bit. We're noticing that. We feel busier than we felt in the last 12 to 18 months, which is kind of interesting, because if you look at the overall data, the inventory appears to be going up still, and we're going to get to that in a second. But you can see here, January, February pending contracts was quite low, and March, we're starting to creep up towards where we were last year. This is that dashboard that we collect internally. The other data that we're reviewing is coming from the Austin Board of Realtors broad data, but that only comes out monthly. So we collect this every week because it helps us when we're preparing properties for sale. And that's kind of interesting. We're seeing the same thing here. Inventory is going way up, but you'll see on this orange line here, pending contracts is staying pretty steady. So we're pleased with that. We are finding that sellers that are presenting well and pricing aggressively, and I mean aggressively to the downside, right? So we always say, hey, there's a range where a property could sell. Sellers that are choosing to price in the lower end of that range are getting sold a little quicker. One other thing, I'll go backwards. I want to point this out. I want to just point out the average days on market. Average days on market is 95 for the broader Austin area. It is lower for different subsets of neighborhoods, right? We always talk about real estate being hyper local. Well, when we look at days on market for other neighborhoods, for specific neighborhoods, it is quite lower than that. Don't forget, this data set includes everything, right? Out to Georgetown, out to Leander, everything that's in the Austin MLS. So it's important when you're looking at selling a property or buying a property that you're looking specifically at the inventory and the market patterns and market mechanics, if you will, in that area that you're looking at. We are getting homes sold a little bit quicker than the average days on market, because most of the places that our listings are in areas where the average days on market's a little bit lower, and our sellers are listening to us and pricing correctly, in our opinion. So anything else interesting from this? We do see inventory coming back up. A lot of people have become accidental landlords because they've chosen not to sell in this market and just hang on for the long term. As we know, real estate is a more forgiving investment in the long term. This is a kind of broader view of that other chart where we collect the data. You notice that new listings are going up by month. So we have more inventory coming to the market in the broader Austin market in March than we had the previous year. What I think is interesting about that is if you look back at this chart here, in March of last year, it reflects the same pattern. So March of last year, we're at 1625, or I guess early April, we're at 1625 last year, and we're already at 2021 for this smaller geographical area. Listings are coming on a little bit stronger than they did last year. There's a lot of uncertainty in the broader market. The bond market isn't behaving as expected. The stock market certainly isn't behaving as expected or as people would wish. But our philosophy is that we're here to help you navigate the current market we're in, right? We can't control the market. That's like trying to control the weather, but we're here to navigate that current market. Pricing has been remarkably stable. I guess that's a bright spot in the Austin real estate market in the last 2.5 years. You can see here, there isn't much of a flatter line than this. Both the median and the average pricing has been very, very stable over the last year or so. They're still seeing buyers buy in this market, which is fascinating to me. I think that broadly, consumers don't have a ton of confidence because consumers, just like corporations, like predictability. And the news hasn't been predictable. The stock market has reacted accordingly, and the bond market has reacted accordingly. Something that I think is interesting to point out, when the stock market goes down, we would expect the bonds to go up and therefore interest rates to come down. That hasn't happened. And there's a couple different theories about it. Some people say that there could be some investment being pulled out of the United States, and that would make both stocks and bonds go down. But we would have expected, when the stock market goes down, bad news for stocks tend to be good news for bonds, and then interest rates would come down. But because that didn't happen, interest rates have actually peaked back up. Right above the 7% level. The markets aren't moving quite as we would expect, but again, we can't control the markets, but we're noticing that the consumer sentiment is down. Consumer confidence is down just because of all the gyrations in the market. We can help you. We can talk about what has happening in the local market and bringing it full circle. If you guys have any questions about real estate, which I'm happy to discuss, or we can theorize about the bond markets and the stock markets, but I'm not really an expert in that any longer. And bring it back around. If you guys have any questions about real estate in your neighborhood, in a different neighborhood, if you need a name of an agent to help a parent out of state, just let us know. We're always happy to chat. Most of you have my mobile phone number. You can just text me.